Dan Bienvenue, Calpers interim CIO, joining us now to give us his perspective. Dan, you guys invest for the long term, but nevertheless, I'm curious as to your perspective on what we're seeing in the short-term price action. A lot of people are pointing the fingers at Evergrande, that's causing jitters. We've got the Fed coming up. Obviously, that's a huge factor for these markets. Just give us your perspective on what you're seeing on the screens in front of you.
Yeah, certainly. No, and as you mentioned, we are certainly long-term investors, and we keep that as our focus to make sure that we're really focused on the long term, because our liabilities are measured in decades and generations. But certainly we watch what goes on in markets, and I'd say what you're seeing here certainly is some technical factors. We've got markets that have been above their 200-day moving average for nearly a year now. You certainly got months like September and October that have historically not been great months for the markets, and you've seen breadth narrow a little bit in the markets. So certainly we're keeping an eye on that. And, frankly, when you look at everything going on out there, whether it's the Evergrande situation, as you mentioned, taper talk, and, the Fed coming out tomorrow, certainly valuations aren't cheap across markets, equity markets, bond markets globally. So, political, topics, whether it's geopolitics or some of the topics around taxes and the like. So lots of things to keep our eye on, but earnings have been strong. They continue to be strong. So, certainly they're positive there as well.
Dan, you kind of allude to the massive dislocation in different markets, like how things are priced versus how they should be priced. I'm reading into your words, but which leads me to the Tina narrative. There is no alternative, which was some people were talking about that yesterday when we did see it turn around through the end of the trading session. How do you invest and get a return without taking on too much risk? Are you inherently just having to take on more risk in your portfolio?
Well, that's something, frankly, that we're looking at right now. We're in the middle of our asset liability management process, and with that asset liability management process, that happens once every 4 years, where we really kind of set the risk appetite for the portfolio, and then the idea from there is for us to really manage that portfolio to that risk appetite, and that risk appetite is set by the board, but certainly staff working in conjunction with the board, and we're spending a lot of time on that. Your question around risks and some of the sort of asymmetric risk between what we see in the bond market and see in equity markets is something we're keeping an eye on. But really, our focus is about setting the portfolio up for for long-term returns. As I say, our liabilities are measured in generations, and we want to make sure that we set up the portfolio to succeed across those generations.
Dan, inflation is going to have a huge impact on that long-term position that you are taking. What is your perspective? Is this temporary? Is this something that investors need to think about? If they are thinking about it because they're worried about it, how can they protect themselves?
Yeah, it's a great question, and something certainly that we're spending a lot of time looking on. I would say that in general, we probably resonate that it's transitory in some way, although probably it has been kind of staying higher than I think we would have thought early on, and frankly than many of the Fed watchers would have thought early on. That said, certainly inflation is an important topic. It affects the liabilities as well as it affects the assets, certainly. It's one of the reasons why we have put some of the defensive positioning into the portfolio that we have. But certainly inflation is something that we're watching closely.
You've also borrowed billions to try and increase returns, because that 7% investment return target is really tricky, particularly when it came to 2020. How are you managing that risk of borrowing to get that return?
Well, borrowing, right now we have some leverage in the portfolio, but that leverage is actually taken as an active risk, and it's right around, say, 4% of the portfolio. One of the things that we're looking at in this ALM cycle, asset liability management cycle, is whether we actually add sort of strategic leverage to the strategic asset allocation. It's something that is currently being debated at the board level. We look to be making a decision here in the kind of the November timeframe. But as of now, leverage is not part of the strategic asset allocation for Calpers.
Let's talk a little bit more about leverage, though. We have seen, obviously, liquidity having a huge impact on asset prices. Do you think we are through the bulk of the pickup we've seen in asset prices as a result of that liquidity? Do you think it's going to taper off now?
Well, I definitely think that stimulus is tapering, right? You're seeing certainly the Fed talking about, tapering. Certainly you've seen some on the fiscal side, reduction in stimulus coming out. And frankly, this is something that you're seeing not only here in the U.S., but seeing globally. So certainly I would say that stimulus is coming down. That's not, though, to say that there isn't just still a ton of liquidity in the markets.
Yep.
And you're seeing this in frankly in equity flows and bond flows as well.
Dan, it's been a great pleasure. Thank you very much indeed for sharing some time with us. More next time. Dan Bienvenue, Calpers, interim CIO.